Hey everyone, welcome back to Corporate Decoder. Today BYNO just filed their latest 8, and I am seeing one reason for them to keep pushing their deal deadline. Quick note, this is not financial advice, just my take on public filings for educational purposes. BYNO has officially used another extension for their business combination, and they are banking on more time. This filing is an 8K, which is basically a way for publicly traded companies to announce big news that shareholders need to know right away. It is not like a regular report where they detail everything quarterly or yearly, but more for immediate updates. The event they are reporting happened on the 7th of July, but they are officially filing this on the 9th of July 2026. That is a common gap between the actual event and the official paperwork. So who is BYNO? They are a special type of company called a SPAC, or a special purpose acquisition company. Think of them as a shell company with no business operations of its own. Their whole purpose is to raise money through an initial public offering, and then use that money to acquire an existing private company, effectively taking it public. This is what BYNO is trying to do. They are incorporated in Delaware, which is a very common state for companies to set up in because of its business-friendly laws. This is their specific commission file number, a unique identifier with the Securities and Exchange Commission, or SEC. And this is their IRS Employer Identification Number, or BY.N.O. This is their principal executive office address. Interestingly, their phone number is an international one from Sweden. This suggests a strong connection to Nordic or European markets. Here we see what BYNO has listed on stock exchanges. They have units often called UST sometimes, which are packages typically containing a share of stock and some warrants. Then they have the common stock itself, BYNO, and the warrants BYNO. All of these are traded on the UTC Pink Limited Market, which is an over-the-counter market. Generally for smaller companies or those that don't meet the stricter listing requirements of major exchanges, like the NYSE or NASDAQ. Looking at these boxes here, they are basically confirming this filing is not related to any tender offer or other specific corporate actions that have separate communication rules. BYNO is checking the box to be considered an emerging growth company. This gives them certain regulatory advantages, like being able to delay adoption of new accounting standards. However, they are also indicating they are not using the extended transition period for these standards, meaning they will adopt them sooner than legally required for emerging growth companies. This section, item 8.01, is for other events. This is where they disclose any significant events that the company deems important enough to report outside of the more traditional quarterly or annual filings. And the big news here is right in the title. They've extended their deadline to complete their business combination. Remember, SPACs have a limited time frame to find and merge with a target company. If they don't, they usually have to liquidate and return the money to investors. This paragraph explains that they already got shareholder approval last year to push their deadline. They plan to extend it multiple times up to the 12th of August 2026, which is now the final date for them to complete a merger. They also have the option to extend it month by month if they need to, as long as it does not go beyond the 12th of August 2026. This is the core of today's filing. On the 7th of July, they actually put money into their trust account to pay for this extension. They deposited $17,470. This is a standard practice for SPACs. When they extend their deadline, they usually have to deposit money into their trust account, which is where the IPO funds are held. This deposit effectively buys them more time. By doing this, they extended their deadline from the 12th of July 2026 to the 12th of August 2026. So they have one more month to find a deal. They also mention a press release they issued on the 9th of July, and that any information attached as Exhibit 99.1 is part of this filing. Those exhibits are often where you find the actual press release itself, which usually has a bit more color around the announcement. This section is standard boilerplate. When companies talk about their future plans or expectations, they have to include these disclaimers. They're telling you that statements about the future involve risks and uncertainties, and actual results could be different. They are basically saying, don't sue us if our predictions don't come true. This is where they list any financial statements or exhibits that are part of the filing. This confirms that Exhibit 99.1 is indeed a press release. This refers to the interactive data file, which helps make the filing more searchable and accessible for analysis. The report is officially dated the 9th of July 2026. Here is the signature. Thomas Fairfield, the Chief Financial Officer, has signed off on this filing. It is his responsibility to ensure the accuracy of these reports. So, what does this all mean? BYNO is in a race against time, and they've just bought themselves a little more. The $17,470 they put in is a relatively small amount, but it shows they are serious about getting a deal done. They had to extend their deadline because they haven't found the right company to merge with yet. Historically, SPACs that need multiple extensions often struggle to find a suitable business combination, and many end up liquidating. A lot of SPACs, especially those trading on the OTC market, see their stock price decline significantly as their deadline approaches without a confirmed merger. For example, companies like Revlon, which had its own SPAC-like issues and subsequent restructuring, show how difficult it can be to navigate these situations. When SPACs can't close a deal, investors typically get their initial investment back, but the stock price often tanks beforehand as the perceived value of a future merger evaporates. The fact that they are using this extension suggests they might have something in the pipeline, or they are hopeful about closing a deal with their remaining time. The key question for BYNO investors is whether this extra month will be enough to secure a merger and avoid liquidation. It is a common strategy to use these extensions, but it also signals that finding a good deal is proving challenging. What I am actually looking for is news on what company BYNO is targeting for its business combination. The extension is just a tool. The real value will come from the acquisition itself. If they announce a solid target that has good growth prospects and a clear path to profitability, that will be a positive sign. Otherwise, more extensions could lead to a creeping devaluation of the remaining funds in the trust. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Check out the Discord in the description.